It's all about nutrient efficiency, right?
Exactly.
I've taught you all the things that you know.
Oh, yeah, here we go.
I'm Sherry Cook. I'm passionate about helping farmers with crop nutrition, and I'm here to help you with your operation.
One, two. All right, there we go. Well, good afternoon, everyone. Our session this afternoon is titled Farmland Update, Holding Soft Landing, or Bubble Bursting. I'm Randy Conan with the Red River Farm Network, back here from, actually I retired in July, so I'm helping out here and get a chance to do this seminar. Our seminar with Farmers National, our guests, Kyle Nelson. Kyle is an ag real estate appraiser, farm manager, and real estate sales based in Fargo. And Eric Skolness is a farm manager and real estate sales based at Glendon, Minnesota. And Marshall Hansen is a land auctioneer, and he's based out of Salem, South Dakota. Good afternoon, guys. Let's just talk. How would you characterize land markets since Big Iron 2024?
Well, I always try to sum it up with one word, one or two words, and the word I'd use is confidence. Can you hear me now?
There you go.
Okay, I was trying to sum it up in one word, and the word this year is confidence. Despite some of the uncertainties that the previous panelists were talking about, we see the land sales continue to be steady. In most cases, I would say the cases contrary to that are poor quality land, or in areas where we've had some really astronomical sales that just were anomalies, and subsequently, they just weren't going to keep up with that. So the perception in some of those cases is that the market is down, but reality is it's pretty steady. So confidence is the word I would use to describe it this year. I don't know if these guys have any input.
Yeah, I'd say, really location. If you've got land that hasn't been offered to the market these last few years, and you get a tract of land to sell publicly or to sell in general, supply and demand, it's bringing good money. I'd call it steady on good quality land. Like Kyle said, maybe on if there's a blemish or a marginal quality farm, maybe it's off a little bit.
I'm going to agree with both of them. This land market is just consistent. There's going to be a lot of ground, I think, coming onto the market that might put a little pressure on it. But overall, if there hasn't been a whole lot moving in a particular area, there's still a lot of pent-up demand for that ground.
Do you see the land being resilient, maintaining and continuing?
I don't see anything backing off these land, substantially in values. I think the last panel talked about the interest rates, and guys that were investors had another spot to put their money here the last few years and get a pretty good return in bonds and treasuries. I might see a little bit of those investors moving back into the land market as those interest rates decline. Just gives them another spot to put their money.
I think it depends on any given area, like we were talking earlier. Every area has their own personalities. Some are aggressive, some are less aggressive. The big key I feel is how many next generation farmers are in that area, because that motivates the 60-year-old operator to buy that piece of land for the next generation, whereas they might be within 10 years of retirement. Why would I do that? So to me that's the biggest key I see, how many next generation farmers are in a given area.
Eric, you seen the same thing?
Yeah, I would. Yep. Yeah, I just a week ago had a land auction, and the buyer on that was kind of in the same situation. He's got some children who have expressed interest in farming and continuing to farm with them, and so it's more of for the future.
Yeah. Are you seeing any areas a little stronger or weaker than others?
I think it all comes back to volume. If there's an area that there has been a lot of ground getting moved here in the last couple of years, the pent-up demand has declined versus an area that's been quieter, and guys are, just have been waiting for a piece of ground to come on the market. They might sell a little higher than probably what they should.
I usually have the same, I see the same, been doing this 20 some years, the same pockets over that course of time. You know, some are weaker and some are stronger, and just it's attitudes, it's whatnot. You know, to be specific, I mean, I've always thought, you know, Western Steele County into Griggs County was an area of opportunity for other people, for an investor, for example. And east of here, Lake Park, Ulen, Hitterdall has for 20 years been super strong. I just use those two as kind of opposite sides of the spectrum.
Have you seen commodity prices impact land values at all, or is it too soon?
There again, they should, or you would think it would, but we're not. That's the confidence. We're not seeing it. I mean, I said up here 2 years ago, I thought we were going to probably start to see a correction, and last year I said, well, I guess I was wrong. So,
What's influencing this market then?
motivation. I mean, there's still a financial wherewithal for enough people influencing the market, but it's motivation. Do you have that next generation coming along that makes you want to buy more land, or you know, maybe you don't. I foresee, you know, if things stay as they are, we're going to see some. And we saw this 10 years ago. Some 60-ish-year-old farmers that don't have a successor decide, why do I want to tread water for 5 more years? They quit then. And I remember, you know, some fairly new grain facilities and shops. Why would you have built that if you were going to retire and sell it in a few years? But I don't think it was probably part of their plan. But so, you know, maybe we'll see some of that in this run, a few of those kinds of situations. But I do see more confidence and optimism than, you know, maybe 10 years ago in that regard, when we were maybe in the same place commodity market-wise.
Are you seeing the absentee owners more willing to sell, or are they hanging on?
I would say yes, we're starting to have conversations. You know, obviously the first question is are we at the top of the land market, you know, and they're certainly considering their options right now. Some are still on the fence. Some have decided, you know, maybe it makes sense for us to sell the farm today and be able to distribute cash to our children down the road. They almost have that mindset of maybe they don't want to burden them with it, if you will. But there's certainly conversations that are being made, you know, in regards to your previous question. More recently, in the last year or two transactions I've had, a lot of farmer buyers are looking at efficiency, right? I mean, they're maybe more willing or apt to exchange land further away from their farm operation than their headquarters, and which it's nothing new, but there's maybe increased efficiency, you know, in tighter times here.
To swing back on your question about commodity prices and if it's, you know, impacting the land, real estate it's an emotional asset unlike anything else. And very rarely has been times where, you know, it strictly pencils out commodity prices, the land value, does a cash flow. So, I mean, there's just a lot more emotions tied into it versus a lot of other assets that people purchase where, you know, it's strictly a paper decision. With land, there's just, people get attached to it.
Yep.
And they want to own it.
Yep, something about owning dirt.
Yep.
Typically, this time of year, you start seeing land sales pick up, don't you? Are you seeing that again this year?
Yeah, well, we always used to say years ago, it's probably now through March was a marketing period. Online has changed that, and really potentially 12 months out of the year. But that being said, over the last couple of years, when we've seen the commodity markets stabilize, there's not as much optimism. I've seen it's helpful for the crop to start coming in. And we've had a good crop the last couple of years. Last year, I really noticed it. Some of those early sales, late August, September, in hindsight, those ended up being weaker. It's not to predict the future, but you know, now we're going to start seeing it pick up, and we're seeing more and more. There always tends to be a lag. You know, we're in the land business, so we're following it. Not everyone does. So you get the absentee landowners that are just kind of realizing it now, and they own, you know, an undivided interest. 5 siblings own undivided interest in this land, and they realize that's going to be problematic down the road. So Yeah, now it's time of year and they start having those conversations. They start picking up.
Yeah. What are you seeing for trend? Are you seeing a trend already or not, as far as values?
Steady. I mean, like you said, the cases, and I've got some friends that in some of these areas say, oh, the market's down. But like I said, they're comparing that to these anomaly high sales and thinking that's the new market when it never was. And hindsight has proven that.
The old adage, one sale doesn't make the market. So yeah, it sure grabs the headlines. You hear a big number, but it probably isn't where the true market value was at the time. So, I mean, that's why I say that we're consistent just based on a lot bigger pool of sales versus that one that grabbed the headlines.
We've had a lot of sales in the last, and as an appraiser, I pick up on this, but you might have a multi-tract sale, and this piece is not that much different than that piece, but they end up selling for $1,000 or $1,500 an acre difference. And they're due factors you can't really quantify. It's just emotion, just circumstances of how the process played out. So, that's kind of messes with the data, I guess. So it's something to be aware of.
Yeah, sure. Kyle, you're an appraiser, you just mentioned. What other services does Farmers National offer?
Well, the bread and butter of the company for almost 100 years now has been managing farms for absentee landowners, and then the spin-off of that is land sales. I do appraisals. We manage oil and gas interests, broker co-op stock, American Crystal, ethanol stocks, and the like. Manage timber interests, which none of us are very familiar with. Am I leaving something out?
Our hunting lease network.
Hunting lease
Yep.
network. There again, none of us are too familiar
Right.
with that. But landowner services.
Typically, a few years back, it was recreational land use was a big buyer of land. That really kind of tailed off, and does it ever come back?
It's come back with a vengeance. And there again, that kind of defies logic. It used to be the deer hunting land. Well, the deer hunting land is still some woods. Waterfowl, the sloughs and the potholes, not as much. But yeah, it started to accelerate it a couple of years ago, and it multiplied several times over. And there again, that kind of land usually doesn't generate a lot of income. So,
It's more small tracts.
It used to be that, and in some cases you still, you certainly see it. You get into Minnesota, and if I'm doing an appraisal out there, let's say you've got 160 acre parcel. Well, 40 acre comparable sales are not relevant to your 160 acre parcel probably, but we're starting to see some bigger numbers on larger tracts of land, like 7-figure purchases on land that really doesn't provide a whole lot of income. So we haven't seen that before around here.
Yeah.
In the Montana or something like that, it might be a different story, but and I guess, I don't know, do you see much rec in
Down
Dakota?
South Dakota, our recreation is pheasants, is the main focus. And yeah, late 90s, early 2000s, there was a lot of recreational value on this ground. Really died off with the rise in the land prices just because of the total dollars that it takes to buy a piece of property now. A lot of guys that are a doctor or an attorney in a town can go out and pay for an all-expensive paid hunt for a lot less than what it costs them to buy a piece of ground. So they've kind of gotten out of that. And the big thing now is the farmers are so good at what they do that unless you actually farm for habitat, there's not a whole lot of wildlife value there. So you have to make up your mind, are you putting the ground to the best use in agriculture, or are you trying to coincide with recreational value at the same time?
One thing is key on that, and I gotta qualify my comments a little bit. Where is it? So like in this area, the Cheyenne Valley, extending south of Kindred, going down back up to Valley City, has always been highly sought after. Or if you have a piece of wooded land that's not in a hunting area, I mean, we've sold some of that through the years, and it's people want to buy land with the hunting land in areas with that connotation. You might, through the years, and the past doesn't always predict the future, but might have a nice piece of hunting land really close to Fargo, and you think, that'd be great. Everyone's going to want it, and it hasn't seen the appeal. People want the wooded and the hunting land out in the lakes country and out there. That's what I've seen in the past. So I got to qualify my comments a little bit. And I will say too, is if you're appraising something, what is it? What's the highest and best use? Is it agriculture or is it recreation? And if it's agriculture, chances are that recreational land, those 20 acres of woods, they're not going to contribute the kind of value they would as if the piece was as a whole a recreational tract. So you got to keep that in mind as well.
For agriculture land then, can we improve our land enough to see a value increase? I mean, I'm talking tile, irrigation, those types of things.
Any comments? I mean, tile would be the big one. I mean, we're just starting to now probably see it pay for itself directly. For a lot of years, you might spend $1,000 on tile, maybe it adds 500. It depends on. We never have a lot of tiled sale activity at a given point in time because most of it's being done by active operators. But as that price of land goes up, I mean, it just becomes that gap. The cost of tile probably hasn't changed a tremendous amount in the last 10 years. It hasn't gone up as much as building a shop is, for example. So, and part of that is we usually have to pattern tile it. Whereas you get into other areas, you get into central Minnesota, like Olivia, Redwood Falls, they've been tiling for years and they've got the system, they've got huge ditches, and they don't have to pattern tile it. And in those areas, for a long time, you could clearly see it. So I guess the point of that question is, as an absentee landowner, is it pay for itself for me to tile the land? And a lot of times it's like, oh, that's questionable. I mean, it's improving the land, but are you gonna get a return for that? Or is that $1,000 you spend or whatever it is that automatically adding that $1,000 value? And usually the answer has probably been, in this area, no. We're starting to get to that point where maybe it is, and I don't know if you guys have anything to add.
On the buyer side, you're going to figure the value there because that's a depreciable asset in the ground. So, I mean, you can write some of that off, So when you're factoring what you're willing to pay for a piece of ground, that's definitely something that you can consider.
Sure. You see that I can tie into some of the rental agreements too, I think, don't you?
Yeah, you do. I mean, on the farm management side, I have a lot of conversations with landowners about what can we do as the next thing to improve the farm, either for us or for our next generation. And so oftentimes it starts with that is, well, how's the drainage? Do you have good productive soils? It's just a drainage issue that, maybe it's a heavy Fargo silty clay. It's tight, it holds water tight, and has poor drainage. And so those are things that we're having conversations with now. And when you talk to a landowner in that regard, an absentee landowner, and you talk about maybe $100,000 or $120,000 improvement, they've got to have some sort of return on that investment to justify it, right? And my disconnect over the years, or the gap, has always been trying to negotiate a fair return, with an operator that's acceptable to the landowner. And in some cases, common ground can be found in that, whether it's some sort of a drain tile agreement or an amortization agreement. For example, last year I did a 300-acre farm, long-term tenant on it. The owners had no interest in selling it, but they wanted to improve it long-term. And so in that regard, the landowner paid for all of the material, and the operator had his own tile plow, so they installed it. So they both have skin in the game, but we did a longer-term, a 10-year agreement on that, just like if the land was ever sold, they'd be given an opportunity to recoup some of their investment during that 10-year time period.
Speaking of the time period, has that changed at all as far as rental agreements?
Rental agreements, a majority of ours are still, in that 1 or 2 year lease time frame. I'd say that's still customary today. I still get, new clients, every year where maybe they're coming off of a 3-year lease agreement and they're maybe way upside down and out of line, out of the market, if you will, on rent. And it seems like when it's a 1 year or 2 year lease, both parties can adapt, to a changing market more rapidly.
And I'll add to that too. And when I don't manage too many farms, but when I was taking in, there's always be that nervousness with the tenant, especially, going from, some of them had 4-year leases. All of a sudden we're doing 2, maybe 1. you know, we don't have a lot of turnover of tenants, you know, and there's, it's just a matter of making sure it's fair for both sides. 'Cause, I mean, you could have a long-term lease and you think it's favorable, but in the end, if you have, you know, you're not holding the cards on that. It's you know, if you end up on the wrong side, you're stuck at that number. And if it goes the other way, as we've seen 10 years ago, that farmer could go out of business, and a lot of folks in the Red River Valley here realized, they can't replace that rent. They just assumed that farmer was paying them that rent because that was the market, and they discovered they were getting above rent, and all of a sudden it was gone, and they couldn't replace that with, nobody else would pay that. So we feel it's better to have a little bit shorter terms as far as the number of years.
Sure. Flex rent's still a deal or not?
Yeah, great lead-in. So to address that volatility in the market with rents, I mean, incorporating a flex lease or a flex addendum that, you know, is triggered by, you know, revenue base, either production or yield or price component, it kind of takes that volatility out of the equation. You don't have, you know, so many peaks and valleys, I guess, if you will. So typically we have a base rent established, and then, you know, our flex lease or our bonus, if you will, at the end of the year after harvest is usually based on what the production was on that farm for our client. And our price component can be, you know, a monthly price taken from the elevator. It could be an average of the spring and the fall crop insurance price. And then we look at, you know, what's a common net share lease in the area, like a third of the grain, you know, 33% of the crop. And from there, we can determine if there's a bonus rent due or not. You know, this year, I think we'll see a lot of flex leases trigger because we've got a good crop out there, especially in corn, and where prices are at on that, the average of the insurance prices. I think we'll see some corn bonuses. So
I like using it as a tool because I've got some farms that if we had what the market will bear for a cash rent, just a straight cash rent, they would never raise small grains on that ground because they'll lose money every year. So I have it on a few farms. I'll use one as an example. It's just on the fridge of the Red River Valley. It can grow 180 to 200 bushel corn, no problem. It tops out at 35 bushel beans. It tops out at 60 bushel wheat. So I use that flex lease, and it's, you know, we make out really good on corn. It's fair for beans and wheat, and everyone feels like they're a winner in that deal, and it's fair. So that's I guess that's one scenario where I like to use it, because like I said, you get some of this ground that it just, the rent is at a level where your tenant is going to be reluctant to plant small grains or crop like that. So.
Yeah, and I'm old enough to go back to the old 60-40 share crop rents.
Yes. And it's not, we've got some clients, some landowners that we represent. It's not a good fit for them. They don't like it. They'd rather know exactly where they're going to be at every year for budgeting and exactly what their rent's going to be in the spring, and vice versa. I mean, I've got some farmers that we lease ground to where they'd rather just have a straight cash rent lease for their budgeting and know what they've got to plan for their break-evens rather than the unknown, if you will, at the end of the year.
Somebody who's just recently retired, you're on a fixed income, so you want to know.
Yep.
So, yeah, all right. Let's go back to land sales. Are we seeing any weak sales or no sales at all?
I had a quarter that I sold last winter that did no sale, and within an hour of the auction being over, we had it under contract. Just one of those deals where, for whatever reason, guys were sitting on their hands at auction and just took some phone calls and some conversations afterwards and was able to get under contract at a fair price for everyone.
That's what I'm saying, at a reasonable price, or
Yep.
did it have to come down?
Yeah.
Couple things, expectations, realistic expectations. It goes back to some of those anomaly sales and some people thinking that's the new market and whatever. That can be a factor. And also, I would say advertising and having all the tools available that we have today are factors. The no sales I've seen are, let's just say, non-real estate professionals. They put an ad in the local paper and that's where it ends. There's no online bidding, there's no marketing, there's no, mailing list or anything like that. We just assume the buyers are gonna come to us. And that's not always gonna be the case, so. Getting it exposed out there, and not everyone likes online bidding, but it's the reality. It's convenient for most people, and, we still do live auctions when appropriate, because that, there's that segment too. It's you gotta have all those tools in your toolbox, as they say.
That ties in. Is there one best way to sell land?
I think it's
That's the auctioneer.
completely dependent on the property. What might be the best method for a perfect quarter of ground with zero flaws might not be the same thing that you'd want if you had a piece of property that had a lot of issues with it. Maybe has easements that are going to be a complication that you need more time to educate the buyers of what's really going on that land. So no, I completely think you need to tailor it by what kind of property you're selling.
What is
And what the seller's desire is. Ultimately, we're working for our owner, and if they prefer one method over another, well, that's the one we're going to use.
What is it? Where is it?
Yep.
Some neighborhoods just aren't very accepting of an auction. And if I've got a single piece of land in an area, I'm not going to rent a community building and not have anyone there. I know everyone's going to bid online in this neighborhood, so why have a live event? Same, we might be doing more conventional listings. I sold something this summer, it'll close this week, where I did not see the upside. It was in a neighborhood that's pretty conservative. The land was good, but it was chopped up by a river. The tenants were well-liked, but they were not gonna be buyers on it, so I knew the neighbors would be reluctant to bid on an auction setting against them. And not to toot my own horn, but it ended up being exactly right. The neighbor bought it right away, full price, and he flat out said, I asked him, would you bid at an auction on that? He said, no, I wouldn't have wanted to. And a bunch of the other neighbors in that neighborhood would have told me the same thing.
Sure,
So,
more the privacy type.
so you gotta know your neighborhood, you gotta know the land, and who your players are.
On the other hand, if you have a parcel with 3 neighbors that have 20-year-old children, be a different story.
Well, and you have land auctions are still relatively new to this area in the last several decades. And not every area is accepting of that. You go to, I'll use South Dakota as an example, where Marshall's is at. Large pockets of South Dakota have just been accepting of auctions for decades, and they don't mind bidding against neighbors bidding against each other. We've got pockets around here where the neighbors will not bid against each other. And you gotta know that.
What about, we're all a society that's online. What about influencers? Are they having an impact?
Influencers, like how?
I'm thinking like somebody that's online that does sales nationwide or something like that.
Well, certainly the exposure is good. I mean, our clientele, I would say, even if they're investors, we tend to deal with knowledgeable bidders.
Yeah.
We're not teaching them the basics of farmland, and I'm not sure I really want to be dealing with that. If they're,
Yeah.
So, the exposure is the key thing. Even if if they're a farmer from around here, how many of them go to Arizona in the winter or something like that? So, and then we're starting to do more of the target on social media. Or it start depending on geographic area. I'm not a techie expert on how that works, but it'll show up. Your ad for that piece of land or something like that will show up if you're in this geographic area or that proximity to the property. So,
Is it still mostly just farmers buying, or is it investors too? Do you see a difference there?
And again, I think it goes back to what kind of property it is and location. I mean, the investors, they're looking for something that's easy. They want high percentage tillable, that, it's an easy cash rent versus, if it's grassland or pasture acres, you don't see as many investors looking for those kind of properties.
Does that follow productivity scores or anything like that then, or not?
Well, lands, I always compare it to women. The pretty ones get asked to dance. So if it's a better piece of ground, higher productivity scores, that's what everyone wants to own just because it's the simplest home. You're going to have that many more people wanting to rent the ground. So, the higher quality is going to attract the most interest.
and I always say this every year, the productivity index it's easy for people to understand, but it's overly simplified. it's 90 isn't necessarily better than 70. The thing is, in wheat, the PI is based on wheat. So, you know, heavy ground sometimes has an artificially high productivity index. It certainly helps if you're a seller and you've got 90 PI, but it's heavy ground because it's going to, you know, we certainly see that investors are drawn. We've sold land where, you know, it's really good ground. It's mellow ground, but the PI is only 75, and some people say, nope, I only look at stuff that's over 80 or 85 or whatever. And, you know, that's just, it's the reality becomes the market. I mean, we don't make the market. And as an appraiser, my job is to interpret what's going on in the market. So that's, you know.
How about like property taxes? That influence some of the buyings?
To me, that's the scary question. What's going to happen? Here in North Dakota, South Dakota, we're pretty safe with our property taxes. You look at some of these other states, you get into Minnesota, Nebraska, that can really eat into the return on your ground based on what they decided with taxes. And I don't see anything that's going to make them go down in the future. In fact, I received quite a few letters from different counties here in North Dakota that they're having tax meetings this year, and I'm sure those numbers are going to be going up. Yeah. But luckily, we're nowhere near, like again, Minnesota, Nebraska, what they have to deal with.
I always hear it, but I don't always see it play out in reality. Certainly here, there's a difference on, or has been on either side of the river. In part just because there's fewer investors maybe looking to buy on the Minnesota side, just because they don't want to be pulled into the Minnesota tax bracket and whatnot. But, you know, if you have an isolated piece of ground that has high taxes because of a large special or something, that's the biggest thing, I guess. You would assume that would be a detractor, but honestly, more often than not, I don't see it scaring people. It's the dirt. So.
One of the questions I have here too is, can I sell my land if there's a year or more left on the lease?
1 year seems to be all right. You get past that 1 year mark if it's 2-3 years left in the lease. It's kind of like getting married and not going on a honeymoon for 2 or 3 years. If you buy that ground to farm, you want to farm it. So there's definitely going to be some drop off past that 1 year figure. And then that's why a lot of ground gets sold in the fall and the spring. If you're buying this ground, you're closing on it, and you get to go right in there in the spring, and typically that's going to produce better sales results.
And that can go into marketing plan too a little bit as far as the time of year. Like if you know you've got another year on that lease, well, would you sell it in the spring? Well, there's still another full farming season left under that lease, or would you sell it in the summer or in the fall when there's less time to that new owner gets the income or the crop or whatever? So.
And there's ways around that. If you want that sale because you think now's the time to sell this ground or family reasons, you can sell that and delay the closing out till later in the year, push that back, which would theoretically not make it hurt the sale as much.
Sure. How about boundaries? Do you need to survey the boundaries to sell a piece of land?
You need something that the courthouse will record. So yeah, if they're not going to record that property, if you need a different survey done, sometimes you're going to have to do that. Otherwise, if you can give a good footage description, typically that will work.
In the Red River Valley, we've got a lot of fields that they leave no boundary in between. They overlap on their tillage because, God forbid, we don't want to strip a grass there or something. I don't know. But,
or water hemp.
So we tend to, yeah. I mean, you drive another, Iowa or whatever, there's always a line there. So it depends on, I mean, if you've got a field that's, we're going to switch for you. Oh. Hello?
Oh, it's bigger, yeah.
If you got a field that's been farmed as a part of a bigger field and all of a sudden, we're selling it and you've got no discernible boundary, you might want to have a survey. I don't know if you have anything to add, Eric?
Yeah, if we don't, I mean, when I'm working with sellers or even farm management clients, I mean, if there's a question, I mean, if we don't have a clearly defined legal that's cut and dry, I mean, yeah, we'll definitely look at getting it surveyed.
And Stutsman County comes to mind. They're pretty picky about making you establish an auditor's lot and having a survey.
And there's times where that survey can more than pay for itself. I just had a parcel that its taxable acres were 160 acres. We knew that there was more acres there. Went and got a survey, picked up 6 acres from that survey, and that at $9,000 an acre, that sure paid for the survey.
Does access make a difference too in front of some of those sales, as far as getting on and off of the property?
Yes. Knowing what the access is, important. Especially get into some rural areas, you might not have a road, or the road was plowed up. So, and in North Dakota, you do have legal access along section lines. I looked this up. I think South Dakota is the same, but you might have a body of water or something that's
In the way.
prohibits that. And in Minnesota, there is no legal access on section lines necessarily. So, you can't deny somebody access to something, but that doesn't mean you don't have to pay for that easement or whatever. But knowing what your access is, I've encountered this a few times lately on, you're a generation removed from actually farming it, and while they used to access it through this or that way, well, that access is gone now, so it can be problematic of marketing it, because you need a way to get to it, so.
As far as, we touched a little bit on the rents, ag stock. Let's talk there first. Some of the American Crystal stock. What are you seeing with that?
Pretty steady. It's been in the 5 to, well, not quite 6,000. I think there's some listings out there in the mid 5s per share. Playing the wait and see game now, because the beets are not going to be nearly as profitable this year. We're looking last year, what they get 80 or maybe even 90 dollars a ton payment. This year, might be more like 50, 60. So I think we're probably going to see a wait and see game on that. Historically, they start out lower. The highest shares sell at the very end of the marketing season. You usually get buyers are filling out a field. You'll always see the last ones selling in March or April are maybe less than 20 acre allotments, because it's like, I'm gonna fill out this quarter here or something like that. And those tend to sell higher. So we'll just have to wait and see. I think all of the other co-op stocks, ethanols have kind of been steady. I think there's some hot ones now in Iowa and southern Minnesota, I believe, but nothing dramatically changing there on the co-op stock.
Let's talk, first of all, too, if anybody has any questions, just feel free to raise your hand, or I'm sure these guys will be willing to, more than willing to visit with you afterwards. Just let them know. But if you have a question, just raise your hand. We can get a microphone in front of you. Let's talk about appraisals. How long are the appraisals good for?
1 day. I mean, we do appraisal and it's that day.
It's a snapshot.
In theory. I mean, if the market stays steady, then, it can be a telling thing for an unknown period in time in the future. So that's one thing. It's a snapshot in time. And the one thing we can't start predicting, well, we can, I suppose, if you want to lose your license or something like that. So, it's a snapshot in time. But yet I do a lot of work for estate related, and like I got a call yesterday from somebody, they never had a valuation done on their land that they inherited in 1999, it turned out to be. So I'm gonna appraise that as of that date, because he's selling it for what it'll be over, it probably was worth $600 an acre when he inherited it. He's selling it for $7,000 now. So how many years was that? 27, 28. So
How about land with building sites on? You seen that move at all or not?
What was that?
Land with building site on it, with grain setups or shop or something like that.
Very location based. Sometimes there's some great improvements on a property, but if it's not where that other buyer wants it, it just doesn't make sense to them practically. Sometimes the size makes a big difference. If you have a large facility, it just might be more capacity than anyone in that vicinity needs. We ran into that times where, there's a beautiful grain handling facility, but just no one could use that much space. And the idea of getting multiple buyers into the same property, farmers kind of like to do their own thing.
I always tell anybody that listen, anyways, If you're gonna build a grain facility, build it. Don't build it in the back of your farmyard. Put it where there's good access, where there's three-phase, whatever. And then also keep in mind, I clearly see a line of size. If you're at 400,000 bushels or less of capacity of a private grain facility, that's probably where a bulk of the demand is. Once you start getting above that, you are really shaving off, your demand. And that's, I mean, if you're a big farmer and you need, I'm not saying build 2 different 400,000 bushel grain facilities, but it's just the reality that I see. But I see strength in grain facilities because that's an opportunity. You can make money on that. And as we're gonna maybe find out this fall, I mean, storage might be at a premium, but shop, I don't know that unless you're doing a lot of your own mechanic work, which there's fewer people doing that. It's not going to make you money. Shed, maybe limits the depreciation on your machinery, but a grain facility makes you money.
What do you do with a farm site then? You section or divide that off and sell that separately?
Typically, yeah, we'd separate the acreage site from the ag ground, just because you have 2 different buyers there. Not every farmer needs a new place for his son to move into, and if they do, there's 2 different tracks, and they can buy them both. So,
but farmsteads depends on how close you are to a metropolitan area, of course. So, obviously around the Fargo-Moorhead area, they got a lot of displaced farmsteads from the diversion, so a lot of strength and interest there.
Got about 10, 15 minutes left here in our session. Let's begin to wrap it up a little bit here, and that way you can give guys a chance to visit with you afterwards if you need to. Let's talk about, has the land market peaked? What are your gut feeling?
My feeling is, to me, we're in a soft landing. I mean, we're going to see fewer of those peak sales. We're more of a feeling out area. But then again, none of us know what tomorrow brings. But that's my thoughts.
Eric, your thoughts?
I agree. I think the land market has peaked. Now, having said that, I mean, good quality land is still bringing, strong values, which has always been the case, right? Regardless if we're talking now or 10 years ago. That's my opinion. Yep.
I put a caveat, it's peaked near term. Long term, you start looking out 10, 15 years. I still see this ground as a strong holder of wealth, and it's always going to go that way. I think it's going to appreciate, but yeah, in that near term, 1 year, 2 year range, we probably peaked and leveled off.
Are we in a bubble, or is no bubble?
I would not classify real estate as a bubble right now. Nope, not ag ground.
I think 10 years ago when we had this cycle, there was a lot more feeling out because to me, the prior, everyone referred to the 80s, where we lost half our land value and all of that. And a lot of people on the sidelines, is that going to happen? And we found out it didn't happen. A lot of reasons. So I think there was, again, confidence. That's where there's more confidence because it's not that long ago where we had a super surge and then a moderation in the commodity prices. And yes, we had an adjustment, but not anything like the 80s. So I would have thought we'd have seen more of an adjustment than we have, but I think that's to the confidence point.
What are some of the key factors that we should be watching as far as indications of farmland value going forward then?
Supply and demand. If there's too much supply or too much land put on the market in certain areas, I'm not sure there's demand in some of those areas.
No, I'd agree. Exactly. I mean, if you're in an area that has had a decent supply over the last few years, that local geography has absorbed a lot of acres and used a lot of liquidity and financing capacity, and buyers can probably be a little more selective.
What they said.
All right. Well, thank you much. Let's give Kyle Nelson, Eric Skolnis, and Marshall Hansen a round of applause here. And if you have questions, feel free to visit with them afterwards privately.
It's all about nutrient efficiency, right?
Exactly.
I've taught you all the things that you know.
Oh, yeah, here we go.
I'm Sherry Cook. I'm passionate about helping farmers with crop nutrition, and I'm here to help you with your operation.